What if the biggest surprise in NVTS Q3 earnings isn't the earnings number at all? Yeah, revenue matters. EPS matters. But Navitas Semiconductor has a much bigger story developing around AI, infrastructure, high-power systems, GaN, and silicon carbide. And here's the interesting part. If Q3 gives investors the right signals, NVTS could be setting up for a much bigger move. But if management misses on just a couple of key points, this stock could get hit hard. So today, we're breaking down the 5 things I'm watching before NVTS Q3 earnings. And number 5 could be the biggest one of them all. Let's get into it. Number 1, revenue. In Q2, Navitas generated about $10.53 million in revenue. For Q3, management is guiding for $13 million to $14 million, with a midpoint of $13.5 million. That's roughly 28% sequential growth. That's a serious jump. If NVTS comes in around $13 million, the company basically met its guide. But if revenue gets close to $14 million, or even beats it, that's where things get interesting, because investors aren't just looking for one good quarter. They want proof that Navitas is entering a stronger growth cycle. My personal target for Q3 revenue is around $13.5 million to $14.2 million. If we see $14 million plus, I'd call that the first major bullish signal. But here's the catch. NVTS can beat revenue and still sell off. That's why number 2 matters. Number 2, gross margin. Navitas is guiding for around 39.7% non-GAAP gross margin in Q3. Q2 was around 39.5%. That's not a huge jump, but the direction matters. If revenue grows while margins remain stable or improve, that's a healthy sign. Eventually, though, investors are going to want more than revenue growth. They'll want to know when that growth can turn into real profits. So I'm watching whether Navitas can scale without expenses getting out of control. If margins improve as revenue grows, that's bullish. If expenses keep climbing just as fast, investors may start asking, when does this company actually make money? And that brings us to number 3. Number 3, AI data center growth. This could be the biggest part of the NVTS story. Navitas is pushing deeper into AI infrastructure and high-power applications. Management has indicated that AI infrastructure could represent roughly 1/3 of Q4 2026 sales. That's a big deal. But I don't want to hear another generic statement like AI demand is strong. Everybody says that. I want proof. Customer programs, design wins, production ramps, orders, and most importantly, actual revenue. Because there's a huge difference between talking about AI and making money from AI. If management gives specific details about customer adoption and AI infrastructure ramps, investors could start taking this story a lot more seriously. But if it's mostly buzzwords and vague promises, I'd be careful. Hype can move a stock. Real revenue moves a business. And that's exactly why number 4 could become important. Now let's get to number 4. Number 4, cash, losses, and profitability. Navitas had roughly $557 million in cash as of June 30 and was debt-free. That's a solid cushion. But cash doesn't mean profitability. The company is still losing money. So I'm not just watching EPS. I'm watching the relationship between revenue and operating expenses. If revenue moves toward $13.5 million or higher while expenses stay under control, that's a positive sign. It could show the company is moving closer to operating leverage. But if revenue rises and expenses rise just as fast, that's a problem. Eventually, investors will ask, okay, where's the payoff? And now we get to number 5. This is where I think the real stock price move could come from. Number 5, Q4 guidance. Here's the twist. The biggest move after earnings might not come from Q3 at all. Imagine NVTS reports $13.5 million in revenue. Looks good. The stock pops. Then management gives weak Q4 guidance. Boom! That rally could disappear. Now flip the script. NVTS beats Q3 revenue. AI momentum looks strong. Margins hold up. And Q4 guidance comes in better than expected. That's a completely different setup. That's why I'll be listening closely to the earnings call, especially for comments about AI infrastructure, customer ramps, margins, Q4 revenue, and profitability. Now let's talk about the stock. NVTS is around the $13 area right now. My personal scenario-based prediction is this. If NVTS delivers $14 million plus revenue, keeps margins healthy, and gives strong AI commentary, I could see the stock testing $15 to $17. If Q4 guidance is also strong, a move toward $18 to $20 becomes possible. But there's a bear case. If revenue lands near the low end, margins disappoint, and Q4 guidance is weak, NVTS could fall toward the $10 to $11 area. That's the risk. This is not a low volatility stock. It's a high risk, high reward semiconductor play. Personally, I'm not bearish on NVTS. I actually like the AI power infrastructure opportunity, but I wouldn't call this a safe AI stock either. For me, the bull case comes down to three things: $14 million plus revenue, strong AI infrastructure commentary, and better Q4 guidance. If we get all three, I don't think $20 is a crazy target. But I wouldn't expect NVTS to go straight there. Now I want to hear from you. If NVTS reports more than $14 million in Q3 revenue and gives strong Q4 AI guidance, would you hold for 20? Or would you take profits after the earnings pop? Drop your target in the comments. 15, 20, 30. And if you want more NVTS updates before and after earnings, hit like and subscribe. Because after the report comes out, we're going to see whether this bullish thesis actually holds up. And remember, in the stock market, never assume a stock has to go up. Do your homework, understand the risk, and make your own call.